This week, whether it's crude oil, gold, or US stocks, keep this in mind. A one-sided trend is highly unlikely. Only range-bound swings. Last night's price action summed up in one word: chaotic. In two words: suspicious. Crude oil staged a sharp plunge, while gold and US stocks rose in tandem. US equities in particular are once again approaching all-time highs. Let's start with crude oil first. WTI crude surged nearly 10% intraday yesterday, only to crash sharply in late trading, finishing with just a modest gain. This roller coaster move was entirely triggered by a piece of false news. The market had been fueled by panic over rumors that the US would fully blockade the Strait of Hormuz and pushing oil prices sharply higher. But when the actual news was confirmed that the blockade only targeted Iran ports and the actual impact on supply volumes was far smaller than expected. And plus, the latest reports indicate that Iran has signaled to the US its willingness to reach an agreement, and the two sides may resume negotiations. This immediately cooled bullish sentiment in crude oil as speculative capital rush to lock in profits, naturally sending oil prices tumbling. But don't turn bearish on oil just because of this, as the crude oil market is entirely headline driven in the near term, and shifts in market headlines tend to happen extremely fast. I was bullish on crude oil before because I believe a deal wouldn't be easy to reach and oil prices could rebound at any moment. I still hold this view firmly with no change. Now back to US stocks, especially the memory chip sector. It's been absolutely surging lately. Take Sandisk as an example. It has rallied nearly 50% over the past 9 trading sessions and hit another all-time high. Its explosive rally is the result of two positive catalysts combined. First, and most directly, is passive buying. On April 20th, Sandisk will be officially added to Nasdaq 100 index. There are over 200 funds globally that track this index. And to minimize tracking error, these funds must mechanically purchase Sandisk shares before the 20th. This forced large-scale buying and the strongest driver of its short-term price surge. And second, the memory industry has entered a super cycle with a complete fundamental turnaround, and Wall Street investment banks have been raising their price targets one after another, ranging from 1,250 by Bernstein to 980 by Citi, fully igniting market enthusiasm. And from what I've observed on BBC Market Buzz, bullish sentiment towards Sandisk remains extremely strong, and it could keep hitting new highs ahead. A quick note on gold. Gold and crude oil have a classic seesaw relationship. When oil prices fell last night, gold bounced slightly immediately, but its trend is still capped by oil prices with heavy selling pressure at higher levels. Given that crude oil is whipsawing wildly, driven by headlines, gold is almost certain to stay range-bound this week as well, and it will likely take another week for a clear directional trend to emerge. And finally, let's talk about trading strategies faced with such a chaotic, long-short whipsawing market in crude oil. My personal strategy is as follows. Accept that the market has no clear trend, only sideways movement. Stick to the rule, do not chase sharp rallies, and do not panic over steep drops. A spike in oil prices is an opportunity to reduce positions and on pullbacks. As long as geopolitical issues are not fully resolved, and I will go long on dips with a proper stop loss set. As for strong sectors like memory chips and upward trend upward trend has already been established, but we must also watch for profit taking pressure after such a large short-term rally. And in short, the more chaotic the market gets, the more clear-headed you need to be. Don't let market headlines lead you around. Stick to your trading discipline, and only then can you seize the opportunities. And also shout out to EBC Financial Group for sponsoring the content.